All right, so I wanted to go over my trades this week, the trades that I closed. So recap for the week ending March 12th. So total profit for the week was 1277 net US. I had exactly 8 trades that I closed. So I'm going to go through them one by one. So first trade here, I had a Wish naked put at a 15 strike, collected $1.15. So this was for earnings actually. So let's bring up the chart here. So let's just set it up quickly. Wish, WISH, and let's put the spreadsheet on the other side. So let's look at the 5-day chart. So I entered this trade March 8th. So March 8th is around here. So March 9th. So right before earnings, I actually entered it earlier. I didn't get a good entry because I did it in the morning. Would have been better if I got in towards the end of the day because Wish actually dropped. Regardless, on March 8th, I sold the 15 strike, collected $1.15 for the March 19 expiry. Wish only has monthly expiries. Otherwise, I would have taken weekly expiry for an earnings play. And then after earning, Wish went up a bit, but then came back down. I wasn't able to close the trade, but then I was able to close it Thursday. So March 11, I was able to close the trade for 25 cents. So I opened it for $1.15, closed it for 25 cents. That gives me $78 net profit after commissions. Next trade here was DoorDash. Now this one was my favorite trade of the week. I wish I did more of it because this trade was just way too safe. So March 8th, so also on Monday, Dash premiums. Dash dropped a little bit here. Let's look at the Dash chart here. So on Monday, as you can see, DoorDash is dropping from 149 all the way down to 133, and I think at some point I saw it at 129. I think pre-market the next day I saw it at 129. Regardless, premiums were very rich. I sold a 90 strike, a 90 put for this same week, so for March 12th expiry, so with 4 days to go. So here this says March 19th, but it's actually March 12th. So for same week expiry, sold the 90 put. So DoorDash would have to drop from 130 to 90 for this trade to lose. So it was very far. Collected $1.20. But then later on, same day, this $1.20 was worth $2.50. So I did not get a good entry. But the 70 put, so the 70 strike, was worth $1. I didn't do the trade. I was hesitant. I was thinking of maybe if it drops some more the next day, then I'll get in. I definitely missed out because the next day was the 70 put that was worth $1 was trading for like less than 20 cents. So that was another opportunity missed, selling the 70 put. So it's about a $100 missed opportunity. Regardless, I still got this one for $1.20. Closed it for 15 cents on March 10th. It expired worthless, but I like to close my trades just in case. So that gave me a $93 net profit on that trade. But I like it because it was very safe. I mean, it was 40 points away at some point on a $140 stock. So almost 40% away. Plus, DoorDash had already dropped so much. So what are the chances that it keeps dropping again? Now, Palantir, let's look at Palantir. This was an earnings trade that I ended up rolling because it didn't go well. So we're going to have to look up the 1 month chart because this is an old trade, February 16. So February 16 is around here. And as you can see, after earnings, it dropped. It dropped a lot. I had a naked put at 27, I believe. I sold at 27. Actually, if I remember, I sold a put on Palantir after earnings. So this was after earnings when it dropped. I sold a put at 27 strike. But then it kept dropping. The 27 strike got breached for that week. So I rolled it to the 24 strike for March 19. So I rolled it from February to March 19. Collected an extra 58 cents. So you could see here, I initially collected $1. And then the second time I collected 58 cents for rolling. So this week, I was finally able to close this trade for 55 cents. So giving me $91 net profit. Most likely, if I held till next week, this could have expired worthless and I would have made the full $1.58. But whatever, I'd rather close the trade in case something like, in case a general market sell-off occurs, right? And then next, during that week where we had a market sell-off, I was only able to place 2 or 3 trades. I didn't take fully advantage of that sell-off, but Fubo was one of the trades that I placed. And even then, it wasn't even a good entry. It was worth $2.50, like just a few minutes after. Regardless, I sold the 22.5 put on Fubo, expiring April 16 for $1.56. I was able to close it March 11th. I was able to close it for 71 cents. So that gave me $73 net profit. So if we look at the Fubo chart, so I sold it, I opened the trade March 4th. So March 4th is over here. So as you can see, I opened the trade in the sell-off, 22.5 strike, collected $1.56. And then as time went by and Fubo went up a little bit, I was able to close the trade for 71 cents. Now the next trade here is Asana. This was an earnings trade. I went with the 30 strike. I probably went with the March 19 expire. Yeah, March 19 expire. So same week expire. So let's bring up the chart. Asana, we're going to do 5 days because it's only a week away. So March, I opened the trade. Asana March 10th. So March 10th, I opened it around here, right before earnings. So the stock was trading at around $32. And as you can see, after earnings, the stock jumped to 34. So I collected $1.20 on this trade, and I closed it the next day. So March 11th, I closed it for 25 cents. So that gave me $83 net profit. So I closed it right away the next day. And then next trade here. So this is a big profit, but it's an old trade. So it's not necessarily a 1 week profit of $6.97. This was the result of several months, because I opened this trade August 3rd. It was an earnings trade. It was initially an earnings trade that went bad. I had a 23.5 strike, I remember, on this stock, and the stock actually dropped all the way down to $16 at some point. But I held on to it, and I just kept rolling the calls. It was a covered call trade. I kept rolling the calls, collecting premiums, bringing my cost basis all the way down to $15.21. But this week I was able to get out of the trade or close the trade for $22.30. I could have kept it for longer, but my expiry was April 16. My expiry was April 16. I didn't feel like holding on to it more than a month just for an extra 70 cents. Because the max I can get out of this trade is that $23 strike. I got out for $22.30, foregoing 70 cents, but I got out early. I can get back in if the stock drops again below $23. So when I closed this trade, gave me a total combined net profit of $6.97 since August, but it was closed this week. That's why I'm including it this week. So if we look at the chart, now chart doesn't look too good because it was all over the place. So if we go 6 months back, so it's even more than 6 months, but let's just say I got in at 23. So if you look at 1 year chart, I got in when it was trading at around $23. So I got in around here. Then the stock dropped to 15 and then came back up. And then at some point when it went to 56, that doesn't help me because my strike was 23. So my max selling price is 23. I can't take advantage of this $56 price. The only thing I could have done is I could have closed the covered call earlier. I had a chance to close it maybe 2 or 3 weeks ago for 22.6 and I didn't take it. So I actually lost 30 cents or $30 on this trade just for not taking it when it was trading at around $56. Regardless, I decided to close it this week, and then because it dropped so much, I didn't feel comfortable owning it. So I decided to get out and confirm my profit. So XPEV here was another trade that I opened during the sell-off. So let's look up the stock. And it wasn't even a good entry, but I got in. So let's look at 1 month. I got in XPEV February 25th. So I got in around here. And as you can see, it dropped even more after that. So it really wasn't a good entry. But it was a covered call trade at a 30 strike for 27.5. I paid 27.5 to get in with an April 16 expiry. I got out for 28.4. So it's really not a good profit, but I didn't like my entry. So when I saw a chance to get out for a profit, I just took it, which is $80 US, which is not bad. I can't complain with that. So that's for that trade. And then finally, Lightspeed. This was open at the same time as Fubo during the sell-off. So March 4th, as you can see, March 4th open. Lightspeed, 55 strike. This was also pretty bad because it was a bad entry. This was worth $5, I think, the next day. And I think the Lightspeed was trading at $51 at some point. So it was completely breached. But then it came back up. So I had the April 16 expiry, collected $2.50 from selling the 55 put. I did this when Lightspeed was trading around 65. So let's actually look it up. Lightspeed March 4th. So 5 days, I'll have to go 1 month. So March 4th is around here. So you see it was trading at $60, but then the next day it dropped all the way to 52, 51. And so it was completely breached. My put option was worth way more. So this was a bad entry. But because time went by and Lightspeed came back up to $68, $69, I was able to close the trade for $1.60, March 12th, giving me a $78 net profit. So that's how I was able to get $12.77 for the week. And if we don't include this covered call that was open since August, I would have made a net profit of $580 US, which is also pretty good in my opinion. So it was a good week, but once again, I've got all these positions now open that are not doing too well, especially Peloton. Still keeps coming back up and then dropping again. So I don't know what's wrong with Peloton, but I've got Peloton here at 105 and I've got another Peloton at 120. Where is it? I can't find it, but it's somewhere here. Right here, Peloton at 120. This one's not doing well. So total credit of $579, but I think it's trading for $12 right now. So I'm down almost $700 on this. That's just Peloton plus the buying power that it's taking from me. So how much buying power is required for these trades? I always get asked. So naked put on Wish, it has a 30% margin requirement. So it's about 30% of 15. So it's about a $500 capital required for this, or maintenance excess basically. Dash naked put was also $500. If we look at my buying power calculator here, so it's Dash is a 30% margin requirement stock. The stock was trading at, let's say worst case scenario, dropped to 130, and I had a strike of 90. So as you could see, it took $450 of capital requirement. So I'm just gonna round it up to 500. Palantir, I believe, is also 30%, either 30, I think it's 50% actually. So half of 24 strike. So let's just say 1,200. So $1,200 of capital requirement. Fubo was is a 50% margin requirement stock. I'm at a 22.5 strike, but I'm also way out of the money. So that means that if, let's say Fubo's trading at 30, my strike is 22.5. Capital requirement will be about $750. So that's the maintenance excess used in my margin account. Not cash, just maintenance excess. Asana is a 30% margin requirement. The stock's at 30. My strike's at 30, so it's about $1,000. Covered call, well, it's basically what I'm paying. So let's just say 1,500. And XBEV is a 50% margin requirement stock, but it's a covered call. So basically, my capital requirement is what I paid to get in, so 2,700. So the covered calls take up the most of the capital. Lightspeed 55. Well, let's look at the buying power calculator. It's a 30% margin requirement stock. So when I got in, the stock was at 65. My strike was 55. So the capital requirement when I got into the trade was 55, but at some point the stock dropped to 51. So the capital requirement at some point was $2,000. So it varied from 2,000 to 1,000. So let's just say it took the average. Let's just say it took $1,500 of capital to place this trade here. So a total of almost $10,000 of capital. So almost $10,000 of capital to place these trades, and you've got 1277. So for those who look for the return on capital, it'll be 1277 profit divided by 10,000. Now, obviously, some were held a few days and some were held for a couple of months, but that was 12% return on capital in a week. So most of these trades, so March 8th. So you've got, well, if I add the columns for days held, I mean, I have it, but I don't use it that much, so I hide it. So you've got 3 days, 2 days, 23 days, 7 days, 1 day, 221 days, 15 days, and 18 days. So most of them are short, except for the covered call on Virgin Galactic. Yeah.